NewsRadio 700 WLW.
The war in Iran continues, and there doesn't seem to be any end in sight to it. I think Trump right now, the president, is trying to protect as much as possible the oil infrastructure in that country, because it will have to have some sort of impact on the oil production in this world post this war, and obviously trying to keep the Strait of Hormuz open, all while trying to take out the Iranian military as much as he can and end this thing quickly. But back here at home, oil prices, as you know, are now starting to climb once again. And as you know, it is it's becoming more difficult to go about our everyday lives. In fact, if you just look at where oil closed last week, and it was up and down, it morphed up and down. It's very difficult to predict. You have investors that just, if they sent somebody burping, that'll throw them into a complete tizzy. But oil last week, as it went up and down, ended with the price of a gallon of gasoline, at least around here in the tri-state, about $4. Some places you can find them about $3.85, $3.90. Diesel, $5.36. Diesel is what fuels 18-wheelers, the trucks that get product from one point to another, and that would include things like food. And if fuel prices go up, somebody has to pay for that, and invariably it's you and me. And that is where inflation comes in. There are some who think that the Mideast crisis could cause a surge in U.S. inflation to almost 4.2% at some point this year. The G7 continues to meet. So all of that is going on, and all of this goes on right now with a guy that understands economic forces and how things like what is occurring in Iran can affect the way you and I go about our daily lives. He is the author of the #1 Amazon best-selling book, Rethinking Economic Growth, and just looking at his resume, everybody from here to there and everywhere in between want to hear from Dan Varroney, economic strategist. I called him a financial planner once, and actually he could probably do that for you as well. Dan, how are you on this glorious day?
I am terrific. Happy Saturday and happy opening day.
Yeah, let's hope. Look, are you one who anticipates that eventually what's going on in Iran, besides just the price of fuel, are you one who believes that it eventually will affect other things in this country like goods and services?
So the answer is it's affecting everything now. And I want to talk about two things with you, Ken, because they're both germane to our conversation today. The first is oil prices as a result of the oil price shock in the Middle East. And the second is the bond market, how one has triggered the other and how the other has some extreme complications that we need to put on our radar screen. So let's start with oil.
Okay.
So when you look at it, right, so you're right, diesel is up $5.36. So in Cincinnati, I tracked it before we connected, and it's $5.05 on average. The average price of gasoline in Cincinnati is $3.82. So the West Texas crude, that's the U.S. crude, closed markets yesterday at $99.64. The Brent, that's the overseas crude, closed at $112.57. So let's talk about the chain reaction. So everything in this country gets shipped from somewhere to somewhere else. There are truckers. A number of these are independent truckers. They're small businesses, and they're the front lines of absorbing higher fuel costs. They can't afford to absorb them on their own, and they pass them to their customers. They can be food processors. They can be distributors of equipment, of food. They can be the U.S. Mail Service. They can be UPS. They can be FedEx. They can be retail grocery stores. So for all of us who've been going to the food store the last couple of weeks, we're noticing that our food prices have gone up. The price of produce, right, the price of meat, gone up. When you go and you look at, let's say, the plumbing supply stores, the hardware stores, we're seeing prices go up there. This is all connected to the cost of diesel fuel, and that's the bottom line. So I describe diesel as a hidden tax on everything that moves. If the price go up on diesel, we're all going to pay more for everything we buy.
Yeah, absolutely. And he mentioned that West Texas crude was at 99, just under $100 a barrel. There was movement south of that number when it looked like there would be some progress in negotiating with Iran. But then again, it shot right up. And the Brent, the international barrel, is 112. Yeah, you're right, 112.57. Here's what I don't understand. I watched the cabinet meeting where the president spoke for the first time in a setting like that since the start of the war with Iran, and he kept saying that we have plenty of oil here, that oil for the United States is not a problem. It's not a problem. Well, if it's not a problem, then why is the price of a gallon of gasoline going up? I mean, are we that dependent on international markets for the price of oil, which we have an abundant supply of under the ground of the United States? Why are our prices going up if indeed we have plenty of oil here in the United States? I didn't understand that. There was a disconnect for me.
Great question, and I've done a bunch of research on that the last couple of weeks. Here's the answer. The answer comes down plain and simple. So the president is right. We are a net exporter of oil. About 2% of what comes out of the Strait of Hormuz we utilize. The issue is that while the U.S. produces oil locally, oil is priced globally. That's the distinction and the difference. So it's great that we're producing all this oil. So God forbid there was ever a shortage, we'd be in much better shape than we were in the 1970s. But the issue is it's priced globally. And the price shock is coming from the Middle East. Part of that price shock is uncertainty. Part of that uncertainty is that there are a load of tankers in port not moving for fear of being destroyed by the Iraqi Republican Guard Corps. That's the challenge. Insurance companies are at a point now that they're saying, we're wondering if we ought to honor any more insurance, or maybe we ought to cancel insurance. So what you have is that lack of availability coming out of the Middle East, which primarily, by the way, goes to Asia and then to Europe. They're seeing a lack of supply. That lack of supply increases prices, but those price increases are felt globally. Make sense?
So are you saying that we have refineries in this country, albeit very old refineries? I haven't built one in over 50 years. We have oil in this country. Why don't we just refine our own oil and set our own damn price here in the United States? I mean, again, elementary question, but why do I care, or why should it be a problem that China has to pay more and therefore me here in Cincinnati has to pay more? Why is it globally set as opposed to just set nationally here in the United States?
Good question. The answer is it's how markets price the oil. It's how markets price the oil. And it's priced globally. Could it be different? Should it be different? Sure. But the state of play that we're in right now is that oil is priced globally. Mm-hmm. And we're in a global market. And while we've got what some will define as an abundance here domestically, oil is still priced globally. But here's what I really want to share with you, is that the global energy shock that we're dealing with has created another challenge. So I want you to think of the bond market as the foundation of our entire financial system. That key benchmark within that is the 10-year Treasury yield. It's the baseline cost of capital across our economy. So when that yield rises, it immediately pushes up mortgage rates, auto loans, and small business borrowing costs. At the same time, what we're seeing is so we've seen some disruptive days in the stock market. So when you see these higher yields in the 10-year, people are pulling money out of stocks because investors are saying, hey, now I can get a safer return in bonds.
Sure.
That pressures our equity market. So then it's also signaling inflation concerns, meaning that the market believes that rates may stay higher for longer. So what we're seeing right now is a chain reaction. First, there's the energy shock. Then there's the higher yield in the bond market, leading to tighter financial conditions and then slower economic activity. This is why the bond market is having such an outsized impact. And I'm making this point for a key reason. You and I have talked earlier this year, and I said that I was highly confident that we would have 4% economic growth. Based on what we're seeing now on the slowing of economic activity, I'm expecting 2% economic growth. 2% because of uncertainty. That uncertainty comes from we don't know when the conflict will end. Now, the back end of that, the question you're going to ask is, Dan, tell me, when will prices come down at the end of the Iran conflict? So 2 to 3 weeks, we'll see gasoline prices come down. 6 to 12 weeks, we'll see diesel come down. The reason why that takes longer is there's reasons for that. One is it's a more complicated process and a more complicated mixture to put diesel fuel together. Secondly, or the B, that gave you A, the B part of that is there will be goods that were priced at the higher price of diesel. Until that inventory is gone or reduced, businesses will keep hiring at the higher price because they don't want to have to eat that and take the loss.
Yeah.
So what I expect is 6 to 12 weeks following the end of conflict, but I think by the end of the year, I'm fully confident that prices we saw before the conflict will return.
So you're not then of the opinion that is being espoused by the Organization for Economic Cooperation and Development, OECD, that inflation is in the United States, which is, let's face it, it's tricky and it's made more complicated by the way things are going with Iran. Are you of the opinion that it will be over 4% here and very soon?
So it may rise to that, but I'm now going to give you the other side to that argument. I appreciate and respect what the OECD has to say. But in the big, beautiful bill, we have got a massive supply side strategy and infusion going on, where there are concerns about inflation on the other side. We have got a supply side strategy in place. That's why I'm not concerned about inflation going up and staying up, because over time I see prices going down. And the other thing is, all your listeners are seeing more money in their paychecks from the low withholding rates. On average, they're getting between $3,500 to $3,800 in tax refunds, and it's helping, right? Mm-hmm. It's helping.
Yeah, right. No, true. Absolutely true.
And what's going to happen is they will spend that money on the supply side. That will increase demand. The broader that demand increases, that brings prices down. I am not in alignment with what the OECD says.
Okay. All of this is real for the American consumer, and the specter of this will linger over the country. I mean, even diesel, if you are indeed right about diesel, and it's going to be a 3-month process after the conflict in Iran is over, it still will hang over the country with things like summer travel, with things that are baked into pricing because of current diesel prices. And all of that leads to us to November. And if it's not percolating along, I don't think there are very many people that are out there that are going to look at that and do the deep dive that you have done. This could have a real impact on a midterm election that usually is not very good for the party in power. And I think this is going to be a difficult story for the GOP to tell through the course of this summer and into the fall. Do you agree with that?
So because I'm a numbers person and a data person, here's what I know. That when you read the polling data and you look at the popularity of the Republican Party and the Democrat Party, I'm seeing the Democrat Party is not faring very well in their favorability numbers. Their challenge is that they need to come up with if you don't like this, we've got a better plan. So the question, Ken, is are voters going to automatically flip and say, we're disgusted, we're just going to go and vote for the other folks? Well, if the other folks just have a strategy of, we don't like this guy, that's not good enough. You've got to have a substantial reason other than don't like this guy or this guy screwed up or whatever it is. What is your pitch they have got to produce a tangible pitch that says, if you put us in power in the House and the Senate, here's how your life will be better. I'm not hearing it yet. And until I hear it, I'm going to say that I'm going to hold my powder dry until we get to Labor Day and see where things stand. Yeah. And I think that's just the way, it's just the way I see it, because I've never seen party favorability ratings that low for Democrats. And I think it's something that they've got to figure out. And if they don't, I don't think that people will automatically pull the lever for a Democrat candidate because they're the other party. I think this is a different year.
Yeah, it is a different year in a lot of different ways. There's no question about it. And what's going on in Iran, Dan, I got about 30 seconds. But if we're there and we're doing what we're doing, we damn well better finish it. It better not be one of those things where, okay, we're going to negotiate something here because we'll be right back in this thing in the next 36 to 48 months. Guarantee it. It's you either finish it or you risk all of this starting again, and also what it might do to the economy in the process. But we love having you on, and the best part about it is we get to see how it transpires between now and November. And for your time today, Dan Varroney,
pleasure. Happy to come back.
Your time to you. Yeah, and again, Rethinking Economic Growth. You can find it right now on Amazon.com. Thanks, Dan.
Thank you.